Hello forensic accountants, this is our review of Chapter 7. In Chapter 7 we're going to be talking about the relative size factor test. It's there to detect outliers. We're going to be talking about a few fraud cases, and we're going to be talking about running the tests in Excel, Access, and SAS. The test was invented quite a while back. A company in Cleveland wired $600,000 to what it thought was a vendor, but they got the bank account wrong and it went to a charity. When they asked to get their money back, the charity said, "We're really sorry, the money has been spent, it's gone, and so goodbye to $600,000. Now, I thought, what type of analytics test would have detected it? And I thought if we took the largest record in the subset, 600,000 wired to that bank account, and we looked at the normal deposits to wires to that bank account, maybe 2,000 or 3,000 to the charity, we would find that this largest record was way out of line with what they normally sent to the charity, and we would get a high ratio when we divided the one by the other. We just have a few things to worry about when we actually do the calculations. If the second largest record is 0 or a negative number, we get results that don't have too much meaning. So, if we look at the purchasing card transactions for the District of Columbia, this is one merchant, largest, second largest, and we have a huge ratio. Largest, second largest, and we have a huge ratio. Again, what we are looking for cases where this large number is actually an error, as the 600,000 was, or the transaction is correct, but we entered it wrong and we made a mistake, which is why it is so high. Let's go to the bottom here and look at the Hyatt. One large, these are purchasing card transactions. One large payment for 95,000, the second largest 973, and we have a huge ratio of just under 100. The test works very well. If it's run against accounts payable data, then we pick up this type of error, which occurs infrequently, but the payback is big. The decimal point error. We owe the vendor 3,200. When we enter the number in the accounting system, we leave off the decimal point and vendor ends up with 320,000. The vendor is paid 100 times the invoice amount, paid 199 times too much. I have few examples here: perpetual inventory, insurance claim, healthcare payments, and airline auditors. And the important thing about the bottom one is we're not looking for a number that's too big here. When it comes to alcoholic beverage sales, we're looking for a number that is too small. So that's basically the formula, and those are some of the main findings. We'll look at our cases, and then we will look at running the tests in Excel, Access, and SAS. This was a nice one. Largest divided by second largest. You know, the cash in the vault was just too high. Melody was an assistant bank manager. What she would do, she would regularly steal cash in notes from the vault. What she would do to conceal her fraudulent act would be to inflate the cash balance, the coins. She knew that nobody ever counted the coins, but they always counted the cash. So this is how it would work. She would remove, say, $2,000 worth of notes. Then she would inflate the coin balance by 2,000, and nobody would be any the wiser. This started in 2008 and lasted for 2009, 2010, 2011, 3 years and more. And it was only in January of 2012 that an auditor asked the right question, and that was the end of her scheme. This one is quite amazing. Patricia was the controller at a car dealership. Her salary was in the region of $53,000 per year. What she did, over a period of a number of years, she stole $10.3 million. The way she did it was she transferred funds from the payroll bank account to her personal bank account. This is how easy it is. And this transfer went through because she was an employee and her personal bank account was one of the ones for a valid transfer. Also, she was the controller. It was a dealership that looked exactly like that. I took the photo myself. So what we have to do is, when we have stolen $10.3 million along the way, we actually have to conceal the fraud. And she did this in a number of ways. Gave the auditors fake bank statements, inflated the vehicle inventory account, omitted some liabilities, and wrote some of the transfers off to flat out expenses. So we will see that she had a huge appetite for spending money. If we go to the book, there it is, and we can talk about $32,500 for a luncheon, $5,000 for a Vatican package, $2,500 Phantom of the Opera experience, autographed first edition, dinner with Kevin Spacey. And this doesn't fall under rationalization, and I almost think it's hard to believe that somebody could have the pressure to spend this amount of money. This is a huge appetite for spending. So she was caught. One of the points up top here was, tell your workers, your co-workers, friends and family, that she got rich by investing in airline stocks and working as an online travel agent. The irony here is airline stocks have not done well over the course of history, and online travel agents aren't really needed anymore. As long as you can spell Orbitz or Expedia or any one of those sites, nobody actually needs an online travel agent. I talk about the steps here. I talk about the concealment. And right over here, it talks, there are a few things. We have some links, and these are interesting television clips from the 11 o'clock news. We talk about some of the expenditures over here, and really it was over the top. 78 months for $10.3 million, and restitution ordered to be paid to the Acura dealership. This one is interesting. Tom was the vice chairman of the board of Walmart. It is an extremely powerful position. We talk about his salary in the year before he was caught. $6 million, $4 million, $7 million, huge salaries. And indeed, what happened is, despite this amount of salary, he stole, on average, about $30,000 a year over a period of 10 years. This was one interesting thing from the indictment. He managed to get a $200 Sam's Club shopping card. He got it under the pretenses that he was going to give it to employees as bonuses or something to that effect. And this is what he spends it on: a flip cooler, 2 cases of Miller, 2 cases of Smirnoff, Jack Daniels, tequila, Crown Royal, and a patio torch. If you're going to have a nice party and you earn this kind of money, you really don't have to steal it. So one of the interesting aspects here was the ratio of the small amount stolen to the large salary, and also this was made possible through collusion with the subordinate. He directed the subordinate to approve the expenses, and the subordinate went along with it. And I do question why somebody would actually help their boss to commit a fraud. It's an interesting phenomenon, and probably worthy of some further study. So one of the other lessons here is he was a high-ranking executive. Number 2, vice chairman of the board of directors. If we do look for fraud, we should never assume that somebody is a high-ranking or a long-serving executive, and that because of that alone, they would never resort to fraud or bad behavior. This is exactly what Tom did. You have some interesting links here, and the Wall Street Journal article is particularly long and also insightful. SAS. SAS is a powerful tool. It is probably the Rolls-Royce of data analytics software. I show in the chapter how we can run these tests using SAS. We can also run them doing Excel, which isn't too difficult. And in Access, it gets a little tricky because we are trying to get the second largest number in each subset. And getting the second largest involves looking at each subset, removing the largest, and then looking at the subset again, and now removing the largest again, but now it's the second largest because we've already taken the real largest out. These are the SAS results, and the SAS results differ from the original results, and the reason here is in the SAS program, if I programmed it such that if it sees that the second largest number is equal to the largest number, then it doesn't divide the two by each other and get 1. It then skips the second largest and goes to the third largest. So that is SAS. I like this test. It has a history, very effective for detecting certain types of error or even fraud, and it works particularly well if we look at accounts payable data, and we look at invoices, and we look at vendors, and for each vendor we take largest divided by second largest. This tells us when a number is way out of line with all the other numbers, and it's either way out of line because it doesn't belong to that subset, we paid that vendor in error, or it belongs to the subset but we got the number wrong, which is why it just is an outlier in that subset. Largest divided by second largest. The larger the RSF, the more out of line you are, and also the larger the number of entries, the larger the size of the subset itself, the more out of line it is when the largest and the second largest are wildly different. So, I like this test. Not that complicated. Complicated to do in Access, but otherwise quite tame. So that is the end of our review for Chapter 7. I hope you've enjoyed it. And so from me, it's bye-bye.